Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, August 17th, 2018. This is a midday market update. It's about 12:30, a little after 12:30 Eastern Time as I'm starting this video, and I'm actually noticing some potentially significant technical developments. In other words, the NQ, Nasdaq 100, and a lot of the top components are sitting at some very precarious technical levels. So I want to get this video out, and these are levels to watch. We don't have any well, I should say we had some sell signals here on the 60-minute chart, but as far as the daily chart, that's what we're going to get to in a second. The daily chart in my book takes precedence over anything that happens on the intraday chart. So we'll jump out to the daily time frame and look at some levels here in a second. So a quick rehash. This is the Nasdaq 100 E-minis NQ 60-minute chart. You have this divergent high here. Most recently, we had a divergent high here, and so far it is playing out for a correction. It's not very impulsive, and the SPY isn't really following suit. But as you can see here, we are making a downtrend, and a series of lower highs and lower lows. That's the definition of a downtrend. So this is what we call a very near-term downtrend. Yes, the long-term primary trend is still bullish by all accounts and will be for a while. It will take quite a bit to undo that. But remember, and this is why I do these videos in advance, hindsight analysis is worthless. You got to have a plan, be aware of these levels, because one thing I can tell you, and I say this often, when stocks fall, they tend to fall a lot faster than they rise. So it's very common, more than usual, to see just days and even weeks or months of gains wiped out. And depending on the time frame, of course, you can see weeks or months of gains wiped out in mere days. Or if you're on the 60-minute charts, you can see in just a couple days, 1 or 2 days wipe out, a week, couple weeks of gains. So that's point I'm trying to make is it's be prepared, have a plan, whether you're bullish or bearish. So as I do these videos, remember I'm highlighting key technical levels, support levels, resistance levels. So somebody bullish looking to add long exposure might disagree with my near-term bearish analysis. But they can use those levels to, add to their positions or get back in if they've taken profits, if they're trading actively, or use them however you see fit. Let's see. Here is the level that we just bounced off of. This 73.1384-ish level is a level I've been highlighting recently. That's that white line already there on the chart. You can see a lot of reactions along that level, and so far the Nasdaq 100 has tested that level twice recently. There's the previous reactions. That's why the line's there, not an arbitrary line. We broke out. It was impulsive. We came and back tested that level. Resistance, once broken, becomes support. It was support back here, resistance here, and now it is support again. So you can see we're knocking on that level. So that is really, if you look at it this way, the lows. That's this previous reaction low from the 15th. That would have been Wednesday's low right there. That's a level that if it's taken out, it'll probably usher in some more selling. Now keep in mind there is support just below there. And there's also the potential. I'm going to give something for the bulls and the bears here. If that happens, and I think it will. I think we'll get down there. Just looking at the current momentum, looking at the charts on some of these stocks, I'd favor a little thrust down there. And what that would do is set up the first divergent low that we've had in a while, if it happens soon, either today or early next week. And so it would look something like this: a move down, a reversal. You'd have positive divergence, prices making a lower low and the indicators making a higher low, just like you had back here. And that was a great time to go long, as you can see up above. And there was a divergent low, and the last divergent low before that I had on the 60-minute chart was right here. And again, that's when you want to go long. Try to draw an arrow tool. You can see what I'm getting at here. All right, so that's the 60-minute chart. Let's jump over to QQQ. I'll get to SPY in a second, but to me right now it's all about the Qs. The Qs have lifted this market single-handedly. I'm also noting a weakness relative to the S&P 500 recently. We had it a few weeks back. There was that kind of some steam was let out of the FANG stocks, FAAMG, the top 5 holdings in the NASDAQ 100. They let off some steam, and they had since recovered, had a recovery rally, but now they're underperforming again. I'm looking at my watch list down below, and if QQQ, Apple's the only one of the first 6 largest components that's trading green right now. Amazon, Alphabet, Microsoft, Facebook, Intel, all red. So again, one day doesn't make a trend. But all right, here's where I'm going with this. See this yellow line? There's a lot of lines on this chart, but you can see that yellow trend line right here. Let's see if I can show it to you on another board. There it is, and this is a wedge I've highlighted in recent weeks here. So you had a divergent high there, and then followed by a correction. You have another divergent high here, and this trend line is, we're testing it once again. I've been highlighting it since I believe back at this point right here. So you can see prices are respecting that level. And what does that mean? In my opinion, the more tags you have of a trend line, the more valid it is. Whether technical analysis has become a self-fulfilling prophecy, I mean, it was there before a lot of people were doing it. I've been doing this for years, but most importantly, it doesn't matter whether it's a chicken or an egg thing. The point is there's a lot of reactions on that level, so I'm certainly not the only one watching it, and that's what makes it valid. So if that level breaks, and I think it will, if I had just a trend line, sometimes I buy on pullbacks to trend lines. When I don't buy, when I look to position to short, and I made it clear I've been short for for a while now. I go long, short, but in the 60-minute time frame, I've been short since those divergent highs. It's this, we're on a daily time frame here, so it's these larger divergent highs that tell me that this trend line and the wedge, you can see prices are compressing. That's another part of a rising wedge. You get the price compression, and what that is, momentum is waning. Early on you have these strong rips, powerful advances, and then the momentum begins to wane, and that's why these are called momentum indicators, the PPO, the RSI, and they're showing you momentum is slowing, and that's helps to confirm the bearish nature of a rising wedge pattern. So there it is, big divergent high right at support. Here's a longer term trend line we have to watch. That trend line goes all the way back to mid 2015. There it is right there. Lots of reactions along there. So that is a key level to watch. And what I'll do is I'll just wrap this up. We'll look at some of the top components of QQQ to help, well, let's say to either reaffirm what I'm seeing on the index itself or to refute it. Sometimes I'll go through the top components and something, if I don't see enough confirming evidence with the largest stocks, then I may just ignore this and not try to trade it. But that's what I'm telling you right now. I favor a break of this. It hasn't happened yet. Like I always say, support is support until and unless broken. But let's look at this 60-minute chart. Here's that same trend line. This is actually a 2-hour period chart. You can see lots of reactions along that trend line so far, and we're dancing on it right now. So there it is. Replicate it. I use log scaling, set an alert. I think the next sell signal will come there. It will help. We'll have to look at SPY. You want to see both indexes break down, at least those two. I like to see a confirmation with a breakdown of some key support level on SPY. Why is that? Because if SPY is trading just above a key resist or support level, let's say, for example, this 279.38 on the 60-minute chart. So let's say QQQ breaks down, starts to move lower. You jump in short, but then SPY hits support and the buyers step in here. All those that are trading the S&P 500, the ES, E-mini futures, they come in and buy that pullback to support. What will happen then, quite likely, is the breakdown in QQQ will prove to be a false breakdown. So I prefer to get aggressively short. I want to see evidence that the SPY is broken down. Here's a trend line here. Let's take a look. I haven't even marked this chart up yet. I don't have anything on that 2-hour chart. I guess what's most important here on SPY is this daily chart right here. Let's give you a different board. Either way, what I'm looking at is this trend line right here. That trend line comes off the early April lows. 1, 2, 3 reactions so far. There's that 279.80-ish level I just showed you on the 60-minute chart. I think that's a very important level. Why is that? Let's see. We have 1, 2, since this blow off top, or that that strong ramp followed by a sharp correction, we've had 1, 2, 3 attempts to take it out. Finally, we took it out here. We limped through it, made a breakout, but then back tested it successfully here. We moved up, back tested it again. At this point, and I've said this last week, in my opinion, nothing's set in stone in technical analysis, but in my opinion, the SPY doesn't have any business testing that trend line again, especially breaking it. It's had already several successful tests. If the momentum was in the market, it would be moving up, but you can see the momentum is not in the market. Yes, the SPY is close to all-time highs, but you can see some big divergences. You have divergence from back here and that high all the way back here. Well, you would, I should say, if the SPY makes a new high. But right now, putting that aside, you still have, I'll move these lines, you still have negative divergence from this peak right here. So there's negative divergence. You have this primary uptrend line that goes back to also, I think, the beginning of 2016. This long-term trend line right here. SPY broke down and has been back testing it from below. So we're wedged, if you will, between this price channel, between this minor uptrend line and this more significant primary uptrend line, divergent high. So let's watch what happens on both of those. And there's your, there's your sell signal. Drop below 279.80, and then this trend line, especially a daily close or an impulsive intraday break. You probably know it when you see it. If we get sort of a big move down in one of those 2.5%, 3% down days, that should do the trick on SPY and of course QQQ. So now let's just go back to QQQ, look at the top components. Before we do that, I'll throw this out there. I'm still, liking this VXX trade. It hasn't panned out right away, and I went back in time and showed you some other times we had divergent lows and it traded sideways for a while like this and then exploded. So I've mentioned this one a few weeks back. I think we were right here. We had a divergent low at that point, and we went a little bit lower, and all that did is just simply extend these divergences. They're in no way negated. In fact, the PPO is still pointing up. It's in a bullish posture right now. So if, and this is a big if, next week or anytime soon, QQQ breaks that support line I just showed you, SPY breaks support, you will most likely see this explode and then run up here to at least my first target there, about 39.10, and quite possibly, very likely, either of these potential second and third targets. So there's something to watch, and put it in percentage terms, that would be a pop of about 78% if it got all the way up to that third target. So now let's go to QQQ and we'll wrap this up. Take a look at some of the top holdings. Apple, everyone wants to own Apple. Apple's the best of the bunch. Even before going into earnings, I mentioned that they had, by far the lowest P ratio, the best valuation, tons of cash, and they're just buying back their stock, and that's running the price up. Still has divergence. I wouldn't short it here, but like I said, I wouldn't go long either because of the divergent high and everything else I'm seeing on the weekly chart. And the fact, if QQQ corrects, I can all but promise you, I'll never make any promises in trading or investing, but I can tell you with a high degree of confidence that Apple will go down due to forced selling if the rest of the FANG stocks, and they're already showing weakness today. So let's get to these charts. Here's Amazon, now the second largest component of the NASDAQ 100, chasing Apple to that $1 trillion club. And this is just a beautiful, well-defined, lots of reactions. And again, that's what really stands out to me. It's not just 2 or 3 arbitrary points. We've had a lot of tests on this trend line, and Amazon is wedging up that bearish wedge pattern. There's the negative divergence, and it's testing that trend line right now. So basically, Amazon is one bad day away. That doesn't mean that we're one day away from breaking down. I'm saying one bad day, down another 1, 2, 3%. And like always, you want to see an impulsive breakdown. You don't want to see it limp through intraday. There was an intraday break right there. You can see that candlestick shadow, but we snap back up. You want to see an impulsive red candle. And again, you're going to know it when you see it, and you'll probably see Amazon and a lot of others breaking down at the same time. So there's the second largest component. We go to Alphabet. I have a couple different drawings here. Let's look at this one. They're the same, same stocks, just different share classes. There it is. You have an uptrend line that it's dancing on right now. You have this divergent high in place. These two white lines together form a wedge pattern, rising wedge. Go back. You can see this long-term, the yellow uptrend line. I know this is a busy chart. Let me see if I can give you a clean. Here's one board I had that with a trend line. That's the trend line. So we had this little stick save here. By all accounts, Google is breaking down, and then the rest of the market held up. Plus, it hit support too. You can see there's also a support level there, about 996.31. Not an arbitrary level. There's several reactions from above. There's a gap right there. We gapped above it, back tested it again. So there's another example I use in trading all the time. I don't take a breakout or a breakdown, in this case for a short, if there's a well-defined support level right below, because this is what happens. So you give it the benefit of the doubt. You don't short this until the last of the two break. In that case, that second support level held. And so the trend line break proved to be a whipsaw signal. With that being said, I still believe it's a very valid trend line. Why? Well, since we recovered, look how many times we've tested it again. So that's what you want to watch on Alphabet. PPO is turning down. It's a bearish crossover in the PPO. It looked like it was going to get a bearish cross there, but that was the line's bounce. That was a whipsaw signal. So the last time we had a bearish cross was right here, right there. That was one of the biggest drops that we've had in years in Alphabet right there. We tried to make a bullish cross, and the lines were rejected, kept the trend bearish, and we bottomed here, and there's your bullish crossover. So these PPOs, you can extract a lot of value from those, especially the high-level bearish crossovers and the low-level bullish crossovers. They help to confirm, especially when you line them up with oversold and overbought readings. They can really help confirm your analysis. But first and foremost in my book is price, and that's that trend line break. So there's Alphabet, one to keep an eye on. And Mr. Softy, Microsoft, there's your, we had again divergent highs, and like I said, these divergent highs usually play out. They don't always have to play out for a huge correction, but this was certainly a pretty swift drop there on that divergent high at that point. Went on to put in a second consecutive divergent high, and we had another correction right there. And really, we're just extending those divergences that have been in place back since November. You can see the PPO and RSI making lower highs with prices making higher high, i.e. negative divergence. So we have, if we zoom in close enough, you can see a minor trend line right here that was broken, and Microsoft still below that, had a little kickback rally and starting to roll over. PPO is pointing lower, so was the RSI. You have a couple trend lines here to watch, and so therefore, the near-term, very near-term outlook, in my opinion, on Microsoft, and quite likely the intermediate-term outlook, especially if those primary trend lines break, is bearish there. Facebook, this one's been a nice trading vehicle. I was able to, we had a very well-defined support there around 169.10. I was able to go long, gain a little bounce there, and then mentioned on the site, I didn't take it for reasons unknown. I had some other positions and good enough short on the Nasdaq 100, but pushed right back up here to that 187.37. That was a pretty well-defined resistance level. In a sense, rolled over. And what I'm seeing too, something else I wanted to bring out in this video, is I'm seeing some change of character. What I mean by that is, in a rip-roaring bull market, you get these bullish crossovers, anything even close. Once it looks like you're going to get a bullish cross, the buyers always step in, you get a bullish cross. But what we have here is a rejection. These are pretty darn bearish. When you have the momentum indicators like the PPO or MACD curling up and a bearish crossover, or bullish crossover, looks imminent, it usually happens, or at least in recent years it has. Now we're seeing a change of characters. This is one of the market-leading, most beloved stocks, got whacked on earnings, had a little recovery rally that only retraced. I'll bet you it's probably, I haven't done this, but put up a fib, probably have a nice fib retracement level that it stopped cold at, right at the 38.2. You probably can't see it on this chart, like clean board, and I'll show it to you. So you look at the highs to the lows, and there it is. So we stopped right at that 38.2, a typical, usually minimum. This is the average range, the 38. That's why I have these. There's other Fibonacci retracement levels, but these are the three I like to keep up, the 38.2, 50, and 61.8, because that's where the majority of retracements, if it's only a retracement and there's going to be more downside, that's where they stop in that range. So there it is. So far, Facebook managed a paltry 38.2 retracement and is heading lower, and a rejection on the PPO, so that stock may have quite a bit more downside to go. Intel, I really like this one. I like it from a bearish perspective. Why? Because, all right, so we had this bearish rising wedge. This was pointed out. It was very obvious, very clear, well-defined trend line, negative divergence, everything you're seeing now in those other stocks I just showed you. And this one just happened to play out, and those others haven't yet, but I still think they will. So what happened? You had, once you broke support, you had a couple days there. It was an impulsive break the day of, and then a little kickback rally, and then a pretty swift move down. Kickback rally, the first kickback rally, a second leg down. Now here's what I want to show you. So at this point, and I pointed out on the site, we had positive divergence. If you go back, let's just erase what just happened. So at that point, if we're looking, you had some nice bullish divergence. PPO looked like it was crossing over to confirm. It actually did. It made a cross. The lines just crossed and they were rejected. Where am I going with this? This is not bull market action. This is the sixth largest component of the Nasdaq 100. In a bull market, you get bullish divergence. You guys know this. This is my go-to swing trading time frame. I'll swing trade the 60-minute chart for quicker, more rapid trades that last days, maybe a few weeks. But this is my multi-week, multi-month swing trading time frame. And in a bull market, you get a market leading stock with bullish divergence, very clean separation, everything you like to see on the daily chart, and it doesn't play out. It played out for a paltry little, hardly, bounced right up, pretty much filled that gap right there and then reversed. Now, I'll say this. I'm going to say this. If you're bullish on Intel or bullish on the market, those divergences are extended. The RSI is pushing the lower limits of that because if it goes much lower, it will take out those previous lows. The momentum indicators are still heading lower. So there is some hope for Intel. But if you ask me, I think this was a foiled bullish setup. Again, there was a much larger rising wedge here. And I think we're going to come down and hit this support target zone I have here around 43, 41.64. And that, again, I'm doing this because these are the largest components of the NASDAQ 100. Where these stocks go, the market will go, despite whatever Apple's doing. Apple does not, there's a common misconception out there that, whatever Apple does, the market will follow. Not the case. I pointed that out in the past. Big old Apple had a bear market back in 2015 right here, 45% bear market. I'm sorry, that was in 2012 to 2013. But back in 2015 to mid 2016, it had a 34% bear market. QQQ did not during that time. It had a bear market, but nothing close to that, a lot less. So most of the other stocks in the NASDAQ 100, the top stocks, we're doing much better than Apple. So it can march to its own drumbeat. But again, for the most part, birds of a feather flock together. They're big top-weighted components of QQQ. So it's those inflows and outflows of cash. When QQQ is met with redemptions, they must sell what they hold, and they're going to sell it proportionately to the weightings. And likewise, when money's flowing into the market, flowing into QQQ, they're going to buy those stocks. So they all have their own fundamentals and unique technicals, so they don't have to move in lockstep, but relatively speaking, they will move in relative unison. All right, so that's about it. I can go through all these. Same story. Cisco doesn't look so bad there. Comcast, there's Comcast. It's just a trend line to watch, coming up on resistance around 37. NVIDIA starting to crack today. I don't want to go over too many of these because some of these might be official trade ideas on the site soon, especially the semis. I've got my eyes on a lot of semis right now. Oh, one more I want to show. Speaking of official trades, we shorted Netflix. That was an official trade on the site recently. We did the old second mouse gets the cheese thing on this one. What we did is I waited till the day of earnings. We had the big move down. You guys probably remember that if you're a trader, active trader. We had a huge move down. This was it. We gapped down from here, this point, trying to measure it in percentage-wise all the way down to here, about a 13% gap, but then we rallied and recovered most of that gap. But this is where we nailed it. We hit that 384.37 resistance, shorted it right about here, and we covered here, and then I revised the final target. I had a lower target on this one originally, but I revised the final target to 338.25, and we covered there. Now, where am I going with this? The reason I covered it early, we had bullish divergence in place at the time. Right here is where we covered. We had positive divergence on the 60-minute chart. So again, one of the most beloved stocks. This is the N in the word FANG, F-A-N-G. We had bullish divergence on the 60-minute chart, and it didn't play out. I mean, it played out for a very small bounce, you can see here, but hardly anything. I mean, relative to what this stock would have done over the last few years, usually you see these 60-minute divergent lows, especially on these top leading stocks in the NASDAQ 100. The buyers usually step in and run that puppy up to new highs. Wasn't the case here. As soon as that rally looked like it started to get some traction, boom, they sold into it. What happened here? We recently had a second divergent low, so we extended these divergences. Started to go, boom, fell down again. Yeah, the divergences are still in place, but they're getting stretched. And the point I'm trying to make is this stock can't get any traction. We've had several bullish setups, and they're getting sold into. These rallies are getting sold into just as they start to get going. So can't write that one off yet, but you can see when you look at the daily chart, again, this is the kind of things that I'm seeing now. This isn't bull market action. Low level PPO bullish crossover rejected. Oversold. When was the last time Netflix was oversold? Well, let's go back. No, 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 no. None of these touch that blue low. Here's 2 years. The stock has not hit the oversold level in over 2 years. I'd have to go back farther. We were oversold right at this point. They stepped in. Boom. We're even more oversold now without any bullish divergence on the daily time frame. Netflix, in my opinion, is going lower, and it's going to, as I said it back here all along. My target's been this primary uptrend line. I think Netflix will come and visit this yellow uptrend line, and there it is from a longer term perspective, and that's a minimum target. And we also had, in the weekly, rising wedge, negative divergence. So there it is. So more downside and just about all the stocks. And like I said, I can't make a strong bearish case on Apple, but I do think it will be met with forced selling. It wouldn't be the first one I would short in the sector, but I wanted to point that out. So just to sum it up, keep an eye on those levels that I went through in the beginning of the video, the S&P 500, NASDAQ 100, and if nothing else, be ready. Have a trading plan, whether you're bullish or bearish. If you're bullish, if I thought the market was going to new highs from here or very soon, I would be buying with both fists. You're buying at support, pull back to support, a very well-defined trend line. If you don't buy there, where are you going to buy? You can wait till it hit this other trend line, but again, everybody's different. I'm looking at and expecting and ready to position for a breakdown here, or to add on, I should say, short exposure. And if that doesn't happen, if we have a little kickback rally from here, it doesn't negate this bearish scenario. This bearish scenario is negated in part when these divergences are taken out, with the PPO starting to make new highs, and some other things. There's a lot that goes into my analysis, but that's it. Let's wrap it up here, and we'll see what happens next week. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it and have a great weekend.